Good morning and welcome back to the YouTube channel of Old Bloke Crypto. It's been a week since I've made a video. I've got some more gear since then, some newer equipment and high resolution, etc. Make these videos a bit easier on the eye. So I'm going to get right into it in just a minute. But been an eventful week since I made the last video and lots to cover. So we'll get stuck into it in just a moment. And while I remember it, please hit the like and subscribe buttons and the notification bell, so you're notified of future videos, which of course are never financial advice. And as I say here, the trading range is established for ETH, which we're going to talk about the trading parameters there, how we're going to trade it. Last week when I made the last video, there was a range formed and now that range has been extended. So let's get into it and see what's going on. Now for the uninitiated, this chart could look rather ugly. Obviously we're looking at the ETH USDT chart here. And since last week, and this is the daily chart, since last week, you can see that we've had a significant correction. Around about the 20% level it has come down, which is standard for this phase of the market cycle in the bull phase. 20% is not out of the ballpark. It's quite common. In fact, there has been bigger ones up to 40%. And this is why I say you've always got to have dry powder available to be able to take advantage of this. So what I've been doing as price has been coming down, remembering we're in an overall bull phase that we're in now. And as the price has been coming down, I've just been adding little bits at certain levels to my high time frame longs, including at this mid range we got here. And then you'll see here, the range is quite defined as I've written on the chart. And you can see that yourself if you look at those support resistance levels. So I've taken some more position here, and down around the 31.50 was the last addition to my long, I believe. And so basically laddering in. So this is why you've got to have a lot of capital on the side, because these are the times you really make money. You're buying on the red days. And so we got down to that 30.56. Now, if you remember in previous videos, 31.83 to 31.86 was the top of the previous range. But this has come just a little bit low, and you'll see that range, previous range, was defined by this wick here, and that got down to 31.86. Now, as you've heard me say, 80% of wicks get filled to the 100% level. Sometimes 90%, depends on the market phase. But anyway, this one here, it was filled. It's one of those few ones that got filled to 100%. And just a little bit beyond. Obviously, at the market sentiment, it's no surprising. So we got down lots of liquidity grabs, many longs, over-leveraged longs, billions of dollars worth got rinsed out because they didn't have the capital to back themselves. And so, unfortunately for them, hopefully it's a learning experience and you haven't been caught in it. So you'll see here, we've got this is on the daily again, this big candle, red candle to the downside, and it stopped. The next day, which was yesterday, we're now 3 hours into the Asian session on Thursday here in Australia. You can see it's just this is today's candle. But anyway, a couple of days ago, big rinse out. And what you'll see here as a result, so we started that next day to the downside and established that range low. And then look at this. This is what's called an engulfing candle, which means it subsumes the candle beforehand. And I'm saying it's close enough. It's extremely close to be considered for all intents and purposes in the bull phase of the market, the engulfing candle, which is a significant contributor to the thesis that we have finished our downside move and we're heading back up. But where are we heading back up? Well, at the moment, there's a big fight going on over the last few hours, really the last 3 or 4 hours, about this mid-range level, 35.45. We're sitting on 35.30 at the moment. It's been bouncing around between 3,500 and 3,550. So there's a fight going on here at the moment, but I'll show you why I expect continuation on the upside and not a rejection at this support resistance level. Now, I am not adding any more to this long position because I've finished adding down here. I'm just waiting for the move to continue. But if you missed out, you could, totally up to you, add to your long position or open a long position here with a small position and to see whether we actually do get continuation to the upside or we reject at this mid-range. And you can see here, not as useful as in a trending market, but still indicative. In a ranging market, the EMAs are showing that they're coming back down. but very shortly, and they're starting to compress, but they should also start to expand again to the upside, just of interest sake. But I'll show you some more indicators which confirm my thesis of why we should continue to head towards the upside. But just before I get into that, I will mention that this EMA, the 50 EMA on the daily, is a real indicator to watch at the moment in case we're going to get a reversal. And that is currently coming in at 32.50. So if we get down to there on the daily, then it's certainly an indication that we, A, need to be careful, but B, that there is opportunities to add to our long position. And I may, depending on when and if it gets there, I may add to it at 32.50, or I may wait to see if we continue back down to the range low where I'm more likely to add to my position. But why would I be confident that we're going to continue to the upside? Well, as I repeatedly say, show me the money. And here we go. Look at that. We've had the over leverage longs rinsed out here, just completely taken out, and their liquidity. And look at all this liquidity to the upside. Do you think the market maker is going to sit there twiddling his thumbs with billions and billions in fact, tens of billions when you add it up, of liquidations waiting to be grabbed, and not far away either? Currently, we're sitting on 35.21, and you'll see there's billions within $100 of that mark. There are billions of liquidations just waiting to be grabbed. So in my opinion, this is probably one of the major, if not the major indicator of where the market maker is going to go now that they've had that downside flush, and that we're in a range, is to come back up and grab all this juicy liquidity. Remember, the top of the range is about 4,100. If you look about here, and I'll just move it up here to 4,100, and you'll see the ample liquidity, and even above that. We'll deal with that when we get to it. But I'm expecting a move up towards the range high over the ensuing days, because quite frankly, the shorts have got pretty confident with themselves, and that's dangerous. Just as dangerous as longs getting overconfident. And so they piled in with all this liquidity, expecting this to go much lower with one of those big 40% corrections, which can happen, of course, but they late. Essentially, a lot of these guys are piling in late, as you can see by how close it is to the price action, and they're going to get taken out. And in my opinion, that's going to happen in the next 24 hours, especially with the next US session coming in and the big bump we got today from the market basically not being surprised, which is markets always love not being surprised by the Fed, and continuation to the upside based on the interest rate rises, no interest rate rises now or into the future this year, and perhaps some cuts, but at the very least, not an interest rate rise. So the US market's going to be very happy with that. It already is. It reacted well from the announcement today, and I'll just show you that now. And this is my favorite suite of indicators, and you'll see here. And this is, I was watching this live. It was 4 o'clock this morning, the data release, and then 4:30 this morning for Uncle Jerry and his press conference, which is always very exciting. That's why I need a strong cup of coffee to stay awake. But anyway, the market liked it. So the VIX is down substantially, and all the other indicators are exactly where you'd want them to be, to say that the market is happy, 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 and looking forward to a good day tomorrow and into the future. So no more interest rate rises for the American markets. And you'll see here, range is indicated. This is liquidity bands here, not as detailed as with CoinGlass that I just showed you, but still nonetheless indicating where the relative liquidity lies. But as I said, there's a lot more to the upside. And you can see here we've been trading in a range and for a period of time, and that range is expanded to the limits that I showed you before. Now, the contraindicator, a potential contraindicator, or not, as the case may be, is the ETH BTC chart, which is, as you can see, looking, if you're an ETH maxi and ETH is everything, you wear Ethereum t-shirts and you have an idol to Vitalik in your shrine at home, well, you might be not very happy about this. But for those of us who are more nuanced and hard-nosed about the market, this is screaming opportunity. And so what we've got here is ETH BTC continuing to the downside. And you can see here, I'll just put the line there without drawing it on the chart. You can see we're approaching we're bouncing off major support level there. And so what I'm expecting to happen now that we've had this flush is that ETH will start to move back to the upside here. and alt season to fully start, which it really hasn't yet, because Ethereum has to rally for alt season to start. It's just the way it is. And so now that Denkun's finished, now we've had that big flush, and it's time for Ethereum to bounce, which it's already begun to do. So I'm expecting continuation, and at least to the top of the range, which will take it up. We're currently on around 52.052, at least 54, and potentially 56 to 58 in this range. And then, of course, we break out the range, well, it's game on, back up towards the highs. So it's exciting time. If you're looking at this chart and thinking, oh, things are getting ugly, the opposite, in fact, is that we've touched our support, major support here. And yes, we can always go lower, absolutely, in crypto, but more likely to bounce and continue on to the upside now, given A, the flush, and B, how happy the TradFi is with what's happening with their interest rates in America. So without banging on about it, just reiterating, what I'm doing now is I've got a high time frame long position, and I'll be sitting on that position now and expecting continuation onto the upside. I'm going to defend that position like I have been previously, down to 3,000 and below. If it gets below that, I've got capital to do so. Now, if you have got a position, I personally wouldn't be adding to that position now. I would be waiting for it to continue on to the upside, and you can take profits closer to this range high. That is what I will be doing. I'll be taking profits as we approach that range high. And if we blow through it, great. I'll reassess the situation then, but that's a good take profit point for anybody. And certainly what I won't be doing at the moment is I won't be shorting, because again, bull phase, TradFi happy, Denkun upgrade out the way. And just quickly flipping to the 4-hour chart, we're reclaiming the important moving averages. First of all, the 200 on the 4-hour and heading towards the 50 EMA. All of these things are confluences that we're more likely to head to the upside than the downside, given that a black swan can always happen in crypto, just as in TradFi. I use the example of China invading Taiwan. Could happen anytime. So you've always got to have that dry powder and be aware that we could get an unexpected reversal at any time. But given that that is not something that happens every day, overall expecting a continuation to the upside. And quickly flipping back to the daily chart, the next breakout of the range I'm expecting is on the range high. But until that happens, we will continue to range, and this is opportunity, that's for sure. So my next goal is to take profit, not to add to a position, because I don't have to and I'm established. You may do so. You do you, of course, but I'll be looking to that range high as the next target. So this is Old Bloke Crypto. I aim to be back for another video tomorrow. We'll see how this new equipment has fared and whether the resolution of the video is a lot better than the previous ones. And that's about it today. Stay safe with your trading, trade within your means, and I will talk to you tomorrow.